Hello, today is Saturday. It is the second day of February 2013. My name's Derek. Welcome to today's video. And the charts you can see are on the bottom of the screen. But I'm going to start it off with prop bets and market gambling. Just for a couple of minutes as something I've been wanting to talk about for a little while. Now, this is the proposition definition bet or prop bet definition from sportsgambling.about.com. And in the sports gambling world, proposition bets refers to wagers that have nothing to do with who wins or loses the game. And there's a bunch more on that. And you can read that if you wish. But the key thing that I want to talk about is nothing to do with who wins or loses. And what proposition bet is that? You're making a wager on some sort of proposition to take place. So let's move this on a little bit further, and therefore the game in which is played, where people buy in short, sell in cover at a certain price, should be considered a prop bet and not to affect the outcome. It should be fine to predict future price events as long as their action does nothing to affect price action. Price action should move by those placing or removing the tangible commodity from the marketplace. And you can also throw in taking ownership of such with really intentions of either taking delivery or holding it for that value of wealth kind of deal, but not for the situation of trying to predict the game. I'm going to talk a little bit about leverage when I do the charts in this video a little bit. So it's something I'll at least refer to when I talk about that particular chart. So let's get started. Let's start off within the silver daily chart. And one thing I've been mentioning pretty much since this breakout in here is watch for that failed move and then the fast move in the opposite direction to occur. So there's the possible failed breakout, and it broke down, but now we have this possible failed breakdown, and then it was looking like this might be that possible failed breakout. But now let's analyze this possible failed breakout. Because for that to be the case, what you would expect is at least to make this lower high and then make this 18 average start to decline. So currently it is holding within this area, and this whole series has been nothing but a lot of choppy, wild, volatile movements, to say the least. Now look at this pattern in here. Big green candle up, followed by big red candle down, pretty much of equal duration and making a lower low from the previous day's low. And now today, bringing back up another green candle. Technically, it made pretty much a matching high as well as a higher low for the day. So when's the last time we've seen a pattern like this take place? Well, the answer is right in here, where you had a big green candle up, follow it down back, and then it does it again. So that's definitely some sort of key thing to look at. And if the potential for the failed breakout in here is to exist, then the selling should take place within the week, close below this 18 average of lows. But if this is finding support on the breakout because you have this declining 18 average, you break away, now let's find support at it. Okay, well now we've been in the support area. It's still technically a rising to flat 18 average band, so therefore breaking above these key levels can basically state that, okay, the bull market could be in play, and who knows how large the leg is going to take us and on how many corrections we're going to have that would be successful. Okay, so now let's shorten this out. I've already shown this chart on Friday, and the chart that we're going to take a look at is the hourly time frame, which contains, let me just go back to the Fibonacci so you can understand it. The Fibonacci that I want to go over is from this high and this low. That's the key Fibonacci within it. Okay, so now back to the chart. Again, I talked about the big consolidation here. So therefore, within this type of choppy nonsense, type of a mess, it's trying to, I guess you could say, get some clear direction, because you have this big up move, big down move, big up move. To me, it just seems as if it's going to have a huge, and huge might only be $1 or $2, nice skyrocket above here, or just the start of the pattern of higher highs, higher lows, or it's going to crash the market fairly decently, at least down to that bottom range of the low 30s, but at least that. So that's the hourly chart. Now, within the 5-minute chart, I want to take a look at the action that took place on Friday, which you can see here. You can look at this green candle, which was really fast move from the low 31s to the low 32s, basically a $1 gain, up to this high in here, and then to consolidate back pretty much almost the entire rally. It's just remarkable, to say the least, and then back up again. So let's just look at these numbers. Well, we'll do it with the 5-minute of the gains that took place. So let's bring in the 5-minute chart with the same Fibonacci retracement. So the movements, low 31.30 up to 30, what's the high on this? Well, 32.15. So about 85 cents up, and then it retraces back down to 31.5. Works its way back up to 31, well, basically 32. So that's extremely volatile, to say the least. But again, you can see within here even that the 31.80 was an area on the way up that resisted it originally and then consolidated within it for a bit. But let's adjust the Fibonacci now from this high to this low. And this will be it here. So there's the Fibonacci adjustment. We also got this running average from this low as well. So therefore, there's your case of having that pierce below it. And originally, when you see something like that, you can be, oftentimes you could be or should be concerned when you see this, because now you got the possible events that this area would A, be resistance, or it would continue to crash through. Because when you don't find support where you're supposed to, oftentimes you make a fast move to the next level. But one of the things is that it creates a failed move and then works its way so that instead of, it's like having support at this level, all with a big scare along the way. And then, of course, the resistance thus becoming support, and then support at the end of the session as well. Now, what we're going to do with this is have a little bit of fun with this. I'm going to show the same chart again for the most part, except this time we're going to do silver subtract 28. And the reason why I'm doing this is I want to show you what this would look like when you have like almost 90% leverage, and the type of moves that could take place. This is that game that we're talking about, proposition bets. When you play the options game, that's nothing more than a massive proposition, as with something like this, where you would, for example, if you were to buy in here and sell here, well, then you would have gained about 11% within that kind of movement. So a lot of people that play this get hit with massive volatility, where if their leverage is so large that they, in order to stop a margin call from taking place, they would have to sell. And a reason why a margin call would take place is if I were to be in a stock like this with this kind of leverage. Basically, this is how much I got until the leverage runs out. So if silver drops over 380, I'm going to get that margin call stating, hey, if you want to accept, keep this position, you're going to have to give us a whole bunch more fiat. So, of course, they won't say the word fiat. And they'll just to play the game. When you see the triple and double inverse and all that type of funds, again, major proposition. But the whole point is anytime you play this type of technical game, day trading, that's nothing more, in my opinion, than a prop bet. Okay, so let's move this on to the weekly chart and then finish it off within GOLD or gold. And within this chart here, there's really not much more to say because I've talked a lot about it. I'll just go over it quickly here. You play the game again within this of bulls versus bears. So the bulls have their turn. Then the bears go to here, bulls, bears, and so on and so forth. So you've got all these highs and these lows. So the fact of the matter is, if it makes this higher low, and I've said this before, comes up here, it really does nothing more than give a good bullish setup. And then, of course, the setup would be a really confirmation above this here, regaining of the bull market, and most likely legs of at least towards this level here. And on the flip side, if this current pattern of lower highs and lower lows comes into play, then we'll be looking for at least a test of this level here, and then of course breaking down below that could be very fatal, and I would predict that to be a failed breakdown, if of course that even happens. I do think that the lows have a decent shot for being in for at here, that is, and that within the year it should continue to go higher. But look who's controlling the market, and again, there's not enough people in the world understanding what's going on with the fiat debt-based system to make things have a significant change. Okay, on to gold now, and we'll do the daily chart to start this off with. And obviously, we got this major level that has been resistance on 2 occasions. And this low was a lower low of the previous low, and then it made a higher low, which is interesting that we have a situation where you make a lower low, lower high, lower low, higher high, and that's why you see this. It's extremely important for it to make a higher low, which was pretty much a guaranteed, which it did, and then a higher high. See, we're in that then situation as it's consolidating within this band. If it's unable to get above here and then it breaks down below, then this 18 average band is going to start to go lower. We'll test lower levels, and that's obviously not good for anyone looking on the bullish level. A clear breakout above this level. I'm looking at the next price target to be upwards to the 1729 level. Final chart will be the weekly chart for gold, and I want to talk a little bit about some triangle patterns in here. Now, originally we had a situation where we had, I don't know how we want to draw the downtrend line, it pretty much doesn't matter, and there was pretty much this. And the pattern has broken out to the upside and then continued to correct sideways. But now let's draw another triangle. This one will be more of a symmetrical one, which means we have this uptrend line in place in here, and we have this downtrend line, and we're about 2-3 weeks away from this coming to a completionary phase. So we're seeing a lot of this indecision. The whole thing for the last few years has been just a long time consolidation. So there's nothing to state that, okay, there's a definite rule, it has to be so many periods. No, if this consolidation ends this week and we have big green candles and consistent higher highs and higher lows, well, it was a long time consolidation. And if it consolidates for 2 or 3 more years, it will be even a longer, long time consolidation, to say the least. And that's why this significant level, which has also been tested on 3 times, and that is the area of a little over 1758, really 1750 to 1800 as that band area. That's a big level to look for, and breaking, of course, above that to the back to the previous highs, and then new all-time highs after that, because gold's been in a spectacular uptrend for the last decade and a half or so. Okay, thank you for tuning in to this video, and I'll talk to you later on. Bye-bye.